Edward Brown, host of the Best of Investing, here to remind you to tune in this week on Saturday at 8 p.m. Our guest is going to be Brian Driscoll. You're not going to want to miss this show. That's the Best of Investing on Saturday at 8 p.m. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. That certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is the American Revolution. And today we do have a special guest, Timothy Lyons of Cityside Capital. I'm going to give a little brief background here. So Tim is the co-founder and managing partner of Cityside Capital LLC, a real estate syndication and investment company that focuses on commercial real estate assets that yield strong returns for investors. Tim is also a lieutenant in the New York City Fire Department, where he has served for 17 plus years. Before becoming a real estate investor, he also worked part-time as an emergency room nurse at a level 1 trauma center. Wow. Tim, welcome to the Best of Investing. How are you?
Thanks for having me. I really jammed a lot into that bio, huh? I mean, not your everyday real estate investor, but yeah, happy to unpack all that stuff with you, but thanks for having me.
No, that's awesome. So actually, let's get into this, into your background just a little bit. So you are still, you still are a lieutenant in the fire department.
Yes, sir.
So
18 and a half years later, still here.
18 and a half now. Okay. So this, now we're obviously talking about real estate. So, I'm sure being a firefighter, has its perks from the standpoint of, good pay and pension and all that, but something must have pushed you into real estate.
It did, right? I mean, listen, I was a W-2 grind kind of guy. I like to work, I like to do things, but after having a couple of kids with my wife, I was trading time for money, and I realized I needed to be on the other side of the equation, and equity was the name of the game. So I boiled it down to either owning a business, starting a business, or to real estate, and I just had no interest in the former, so I jumped into real estate.
Excellent. Okay. And then, excuse me. And you also, do you still work part-time as a emergency room nurse, or was that, that's in the past?
I like to affectionately say that I retired as a ER nurse, and I did it in February of 2020, right before COVID. So my colleagues always like to thank me for leaving them right before COVID came on shore there.
All right, so let's get into this. So, you gave me some topics to cover. One of them was shattering limiting beliefs about getting started in real estate investing, passive investing, and being coached and mentored. So, how do you shatter the those limiting beliefs about getting started in real estate?
Edward, being from the greater New York City area, I kind of come from the school of everybody's like guilty till proven innocent, right? I want to, and real estate's no different, right? I wanted to be able to touch the property, to drive past it, to mow the lawn, rake the leaves, collect the rent, do all the things. And when you get started in real estate in the New York, city area, not a lot of things cash flow. You read the 101 books and they'll talk about the 1% rule, or they'll talk about, trying to make $200 per door. And you're like, what? They're like, people who invest around these parts, they lose money every month, because they want the appreciation in 20 years.
Yeah.
So it was hard to kind of get started and to get comfortable investing outside of my local area. But when I put the pieces together and I did the education, I literally, had to know a lot of stuff before I pulled the trigger. And I just started small. I started with a triplex in Connecticut, which is about an hour and a half away from my home. And I partnered with it. And I went from 3 units to several hundred units within the first couple of years. And now we're at a couple of thousand. So, kind of.
Now, did you do that with partners, borrowing other people's money? How did you do it?
Yeah, so the first one was a 3-unit, and I did it with a friend of mine, just because I was scared. I didn't know the rules. I didn't know how to do everything, right? I wanted to share that risk kind of, and he was the same way. But I realized I hated being a landlord. I liked the cash flow. I liked the tax, treatment
Beneficial.
of the income at the end of the year. We did a little better on our taxes. I had the proof of concept. So did he. So did my wife. But I realized that I didn't want to do this, and it wasn't really scalable. Right? I bought a
Yeah.
1920 wood framed structure that I had to put a roof on and had to put siding on, and it was deferred maintenance, and there was a lot of capex involved that I didn't really underwrite correctly for. But I cash flowed, and I understood a lot more. But it was at that point where I got mentored by a multifamily entrepreneur, and he gave me the opportunity of a lifetime to join him on a 43 unit.
All right. Tell you what, we're going to cut to a break. When we come back, I want to hear the rest of that story. That sounds really cool. All right. Let's see here. Our first trivia question on the American Revolution. And these are actually a little bit easier than the average bear. So again, Tim, if you know the answer, don't say anything yet. Okay. America received foreign aid from what country? And this is during the American Revolution. America received foreign aid from what country? Call 888-912-1190. The first caller with the correct answer wins that tanning certificate. Stay with us. You are listening to The Best of Investing. Don't go anywhere. We're going to be right back. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with my special guest, Tim Lyons. And off the air, Tim answered the question correctly. We're going to let him answer it on the air now. So during the American Revolution, America received foreign aid from what country? Now you can answer, Tim.
Edward, I'd like to answer this one. What is France?
What is France? That is double jeopardy. That is correct. Want to make a mention here for Transcendence Theater. This is the last weekend for their holiday production. It's going to be at the Hannah Center in Sonoma. Go to bestnighthever.org. I've been to, probably at least 5 different shows that they've done. It's sort of like off Broadway. Tim, you're in New York, where real Broadway is. This is our Broadway here in the Bay Area.
Love it.
So, Transcendence Theater, their Broadway holiday production. Go to bestnighthever.org. All right, we're in the studio, so to speak, on Zoom with Tim Lyons, who is a firefighter. Now, you're still a firefighter.
Yes, sir.
So this extra income that is coming in is passive, and it's interesting because, I'm a lender, so I like to lend to people like you if you need my money. Most of the time you don't. You go to the bank and all that, but if you can't get money from the bank, then you come to someone like me. Because I also don't want to fix toilets and tenant problems, stuff like that. I'd rather just get passive income. I'm willing to give up the potential profit for just good cash flow. But you actually are more on the investor side. So you actually own, how many units do you own right now?
Oh, we're upwards of 7,000 units, and I don't
Wow.
own all 7,000 of those. I'm a general partner
Yeah.
on that portfolio. But yeah, I mean, it's we've scaled very quickly in a short amount of time.
When did you start?
2019, November of 19 was my first acquisition.
Wow, 7,000 units in 4 years. That's impressive. All around the country, or is it?
Yeah. I mean, majority is located, anywhere from say Arizona to Florida, up to the Carolinas, Tennessee, a little bit in Indiana, Michigan, and Ohio.
Wow. Yeah, because I know that like you said, in New York, with the way the prices are, it's kind of like the way it is in the Bay Area. It's just really too hard to buy with the you don't want to just strictly bet on the appreciation. How did you find all these units?
So great question. So I basically, my company Cityside Capital was born because I realized that there was folks like me who didn't want to deal with tenants, termites, and toilets, right? The 3 T's, as we affectionately call them. And I'm also not that handy, even though I'm a fireman. People think I'm good with tools. I mean, the jaws of life. Yeah, I can cut you out of a car. But they ask me to hang a picture on the wall or redo sheetrock, and I'm not so good at that. So, it just made sense that I was more of a spreadsheet guy. I'm more of a finance type of mind instead of like the hands-on kind of guy. So, we realized that if people wanted to participate in real estate, but they didn't didn't want to be on the active side.
Yeah.
There's a whole world of passive investing. So, but how do you know who is a reputable sponsor or
Yeah.
reputable operator, and how do you know
Exactly.
what markets to go into and what asset class, and all that stuff, and I think I told you before, everyone's guilty till proven innocent in my
Yeah.
world, and I need
Yeah.
to have some certainty in my life. So,
Yeah.
basically, my brother and I, who's my partner, we got our securities licenses, our Series
Okay.
82 and 63. We affiliated with a broker dealer that only dealt with private placement investments in the commercial real
Huh.
estate space. So
Wow.
that's we've been able to raise millions of dollars, tens of millions of dollars in a very short amount of time because we had the network, we had the connection, we had the story, and there was a need out there. People wanted to place capital on the retail side, retail investors, so like everyday Main Street type of folks,
Yeah.
using the cash or self-directed IRAs or what have you. And we were able to provide the diligence and the operators that we put through our own diligence to kind of say, look, we've taken the time, we know the questions to ask, we know the rocks to turn over, so to speak, and we're putting these deals in front of people, and if you're interested to participate, let's have a talk.
Wow. It's interesting because I used to have my Series 7 way back in the 80s. And the thing is, whenever you get your license and then you hung it with a broker dealer that specializes in alternatives, I mean, you had to go through their due diligence for them to approve you and what you were doing. So that must have been kind of a little challenging because this was your first rodeo with them, right?
Well, we had done 3 deals prior to engaging with, getting our licenses and engaging the broker dealer. But it was a lot of work. I mean,
Yeah.
to do all that kind of stuff. And I realized it's a team sport. I realized the capital raising was probably going to be my specialty and my brother's specialty.
Okay.
But the problem is you can't just raise capital and get compensated for it. That's called securities fraud.
Yeah.
You have to have what's called a material participation in the, asset management or the due diligence or underwriting or,
Yeah.
property management, I wasn't leaving New York anytime soon because I still enjoy being a firefighter.
Yeah.
So I had to find something that I was good at, which was capital raising.
Wow. Okay. Yeah, because I want to get into that with you. It's because it's a very fascinating part of it. We've had other people on who've had syndications, but they didn't go to the broker dealer route. Because either you have to pay a commission or that sort of thing. I kind of get into that. Okay. Here's our second trivia question on the American Revolution. Who was the British king during the war? Talking the American Revolution. Who was the British king during the war? Call 888-912-1190. First caller with the correct answer wins that tanning certificate. We'll also want to make a mention here for iTex, which is a barter company. Check them out at iTex, which is itex.com. It's a great way to do business without needing cash. Go to their website. You'll check it out. All right. Stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. One more time, I'm Edward Brown, your host, along with Tim Lyons. Our second trivia question on the American Revolution. Who was the British king during the war?
Edward, I'm going to go with King George.
Which number, though? King George?
Oh, God.
It's not a trick question. It's just I wanted to see if people could get a little bit more specific.
The second.
No, third.
The third. King George the third. Close, but no cigar.
Close, but no cigar. No, that's okay. All right. We will accept King George. All right. Also want to make a mention here for the Tahoe Lakeshore Lodge, close to Heavenly Valley and Kirkwood. You got to check them out. They got beautiful beachfront property, like 200 feet, and every room has a view. Check them out at the Tahoe Lakeshore Lodge. All right. We are in the studio here with Tim Lyons, who is not only a New York City firefighter, but also he's on the show because of his real estate acumen. Is that a fair word? Okay.
Love it.
So now Okay, you had, let's see here. I'm just looking at the various notes that we had here. So committing and taking massive action, moving quickly from 3 units to partnering on 6,000 plus units worth $1 billion in less than 3 years. So how did you get, because it's such a short period for you to get so many units under management? What was
You
the,
know what I do when I hear somebody else say it, sometimes, Edward, I have to pinch myself and say, is he
yeah.
talking about me? Like, is that really, but yes, I mean, so I mean, the bottom line is that we partnered, right? We were able to raise a lot of money in a short amount of time, but since we partnered with more experienced operators out there that were buying 2, 3, 4, 500 unit properties at a time, and I'm really speaking to the multifamily side, right?
Yeah.
Large apartment communities. So the numbers sound crazy, right? A couple of
Yeah.
thousand, units, but we don't own all those outright. Obviously, we're a part of the general partnership when we raise capital, and we
Yeah.
do that through a broker dealer. We have our securities license, licenses, like I mentioned,
Yeah.
and it's just one way. It's one way to help out the team in commercial real estate. Well, all real estate is a team sport, but it
Yeah.
was our contribution. That's what we were good at. It was our zone of genius, and we were able to really dial in and scale up by basically solving that part of the equation.
And who manages the units? Because you're all over the country.
Yeah, so I mean, we're all across the Sun Belt. We're in the Carolinas. We're in the Midwest. So basically, the way it works is that we source best in class operators. So people that have been through multiple cycles, people that have gone full cycle on certain deals. We like a little gray hair, Edward. Like we don't
Yeah.
maybe want somebody who just went to a conference on a weekend and say, you know what, this sounds great. We're gonna go raise some money. We're gonna borrow a ton of it from the bank. We're gonna do some value add project that we've never done before.
Yeah.
Those are people that we're not looking to work with. So, but at the end of the day, that's really where we were born, right? Because people who have capital to be placed, they don't know where to turn. They don't know what questions to ask, and that's really the opportunity, the problem that we were looking to solve for folks. And it turns out that we picked a good problem to solve because
Yeah.
it's been a quick but wild ride.
Yeah, I was going to say that again, this is the first time we've had someone from the broker dealer side of things to be able to do this here. When someone invests with you, okay, we know they get depreciation and all that kind of stuff.
Mhm.
What would be your sales pitch to me as a potential investor? For cash flow, length of time I'd be locked up, that sort of thing.
Yeah, I mean, so people who are looking to diversify their portfolios away from, their standard Wall Street, ETFs, stocks, bonds, 60/40 portfolio, CDs that are laddered at the bank. And they're like, you know what? Everyone keeps on telling me that I really should have some real estate in my portfolio. I just don't know how to do it, right? Sounds complicated.
Sure.
Some spreadsheets, cap rates, NOI, loss to lease. I don't know what this even means. And I don't have time because I have 3 kids. I got to go to basketball practice and, the dog has to go to the vet, right?
Yeah.
And I find a lot of people find themselves in that situation. And once they hear about, wait, I can just place my money passively into a deal, and I can get a Schedule K1 by March of every year, and it shows my income and my depreciable losses, and
Yeah.
there's potential upside and cash flow. Like, that sounds too good to be true. And that's honestly, Edward, it's a lot of what I do every day is talking and educating investors about what's available to them outside of the Wall Street type of RIA community, personal financial advisor community. That's the whole world of alternative investments.
Mhm.
And I really kind of tell them, look, you drive down any kind of major highway and you see a self-storage facility or you see a large multifamily complex,
Somebody
that's
owns that.
it's probably owned by people like you.
Yeah. Yeah.
There's just a couple of hundred of you at 50 and $1 million checks, but 50,000 to $1 million checks. But it's people like us, everyday folks, that kind of own those projects.
And so, what's the minimum investment?
So a lot of our deals are $50,000 minimums.
50,000.
There's a
Okay.
couple of deals that are $25,000 minimums. But yeah, I mean, we also do self-directed accounts. We do cash. We do 1031
Sure.
exchanges.
Do they have to be accredited investors?
Most of our stuff is for accredited investors only.
Yeah.
We do also have some deals that are, for some non-accredited spots, 506B. But
Yeah.
yeah, we can get into that.
Okay. Yeah. It's amazing how I mean, I love talking this stuff with you, and time goes a little bit fast.
It sure
On the
does.
All right. Let's see here. Okay, our third trivia question on the American Revolution. This was a little harder. We started
Okay.
off with some softball ones to kind of tease the audience there. What are the two places that the quote shot heard round the world refer to? We're talking the American Revolution. Two places that the shot heard round the world refers to. Call 888-912-1190. First caller with correct answer wins the tanning certificate, which is worth, by the way, over $100. Nice little gifts we're giving away there. Stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. Edward Brown here along with Tim Lyons. Our third trivia question on the American Revolution. What are the two places that the shot heard round the world refer to?
I don't know. The first one comes to mind is maybe Boston or someplace in Massachusetts. But that's all I got.
Lexington and Concord.
Oh, you said it right too. Not Concord, it's Concord. That's right.
Yeah. I always used to say Concord. All right. So again, we're in the studio here with Tim Lyons. So again, as a potential investor, besides the pitch that you gave me before, what could I expect from cash flow from day one, if any?
Well, before my broker dealer kills me, I'm going to have to say that, there's a disclaimer here that I'm not giving financial advice. I'm not a financial advisor and all the good things, right?
Yes.
But yeah, I mean, like, look, we are looking at deals right now where cash flow can be a little bit challenged. So maybe 8% to 10% of yesteryear, maybe not as much, right? So we're talking more like 5 to 8% cash flow year one.
Okay.
On some deals, and then it's there are tax advantages depending on your situation, that you can maybe use depreciation to offset some of those losses. And just to comment on that a little further, I always say you have to build your team, whether you're active or passive, and part of that team is having a CPA, and not all CPAs are created equal, right? And the thing I like to say to investors is, if you broke your ankle, you wouldn't want to go see a neurosurgeon, yet they both have MD next to their name, right? Sure. You want to go see the ankle surgeon, right? And it's the same thing for the CPAs, right? If someone's general practitioner and they're like, oh yeah, I can do real estate, or if you're in a farming community and there's all farming type CPAs, and all of a sudden you're trying to do Bitcoin or something like that, like, yeah, I don't know, like, so building out your team, make sure they understand. And we work with several law firms. We work with several CPA firms that have some good materials that we can share with you to pass it along to your CPA. Show them where is depreciation supposed to go in the tax return? How does it work? Because you assume that they know what they're doing, but a lot of times we find that people are not taking full advantage of what's available.
Hopefully they know about QBID in the section 199A, where it goes on the tax return. That's
you would hope, but we found a lot of people that we connect with our I guess partners out there that they do a free kind of evaluation of their taxes for the last 2-3 years, and they're like, man, you're looking at a refund, and they're like, really, so yeah, it's really important to build out that team.
Absolutely. So minimum investments either 25 or 50. Cash flow may be starting again. These are just generics that we're talking about here. How long is the money tied up for generally?
Generally speaking, like I say, right before 2022, at the arguable the peak of the market, we were seeing deals turn around very quickly. Within 3 years. Right now, I think you're going to see a lot more deals from a lot of sponsors and a lot of different asset classes go longer. Right, there's going to be 5 to 7 year holds. I think are going to be the new normal, if not 7 to 10. I mean, we haven't done any 7 to 10 deals as of yet, but I could foresee a economic climate where where, the bridge debt is going to be harder to come by, or people are going to be scared by it, because right now there's a ton of debt that's trying to be refinanced into, permanent debt, or, rate caps are expiring. So bridge debt right now is challenging a lot of folks out there.
Well,
So
that's
I
what I was
think,
going to ask you. Is on the projects that you're working on, how much leverage is there?
and I would say anywhere between 50 and 70%. 70% probably in our 2020, 2021 deals.
Yeah.
Second half of 21 and to present day, I would say a lot less leverage, just because of,
Bank.
the headwinds that we've been kind of going into.
Gotcha. Very interesting. Yeah. Yeah. Pacific Private Money, there's a fund that I manage, small fund. It's only about 8 million. And what we do is we buy discounted mortgages, and we're paying our clients just a flat 8.5%. You still qualify for QBID, but there's no depreciation because we're a debt fund.
Hmm.
But there's no leverage, and there's no lockup period. So people can put money in, and then they could. The documents say that they have to hold it for at least a year, but we don't impose an early withdrawal penalty. So we've had people redeem it after 3 or 4 months because things change. Oh, I found a house I wanted to buy. I need my money. Okay, how much you need? 200,000. Okay, boom, here it is. So it's kind of our fund's a little bit more of just a strict cash flow type of thing. But again, you give up the potential profits. Whereas what you're doing, you're starting off with a little bit of lower cash flow, but you get the benefit of it being partially or fully sheltered. And then there's potential profit, with the rents going up and eventually when the prices, when you eventually sell. So there's kind of, it's a nice little trade-off between the two.
Yeah, I mean, it's what I love to talk about with folks is that there's a million ways to make money in real estate, right? And the way that we do it is just maybe one or two ways.
Yeah. Yeah, that's okay. Continue on. We don't have another trivia question. We only do 3 of them in a shot. So this one we have a little bit more time. We're just kind of letting you know that we're going to be cutting to a break here. And I understand about building a solid team. That's one of the points you make out here. It's like I've owned apartments before, and it's all about management. That is so important. They can make or break you. So that's really good that you have, and I'll bet just being a firefighter, there's automatically trust that people have.
I've heard that from several investors, like being a firefighter and an ER nurse. I mean, two professions
Yeah.
that I guess, people kind of say, oh, well, okay, I guess you're a regular guy, and,
Yeah.
I could probably trust you with my life, right? So why not,
Yeah, that's
maybe
right.
invest alongside you, right? I mean,
I'll trust you with my life. I'll trust you with my money. All right,
yeah, I
Tim,
mean,
stay with us. We're going to be coming back with some closing comments. Audience, stay with us. We'll be right back. Welcome back to Sports Econ. That's that's the other show I host. It's called Sports Econ 101. So welcome back to the best of investing. Last time for today, I'm Edward Brown, your host, along with Tim Lyons. So Tim, tell us a success story and then more of a challenging story that you've had so far.
yeah. So, one of our first projects that we did outside of the broker dealer, when we just partnered with a few folks, it was in Greenville, South Carolina, and it was 144 units. It was in a great location, and we kind of just hit it right. We bought it right. We had the right kind of debt. We managed it. We did our value add plan, and we exited in 20 months with a 68% return.
Wow.
To investors. So that was like that was, to me, it was a home run.
Yeah.
And what I like to tell investors is that was atypical, right?
Yeah.
I'm
Exactly.
looking for more of like,
yeah.
I'm looking for more of like base hits and doubles. And, I didn't grow up with a ton of money, so I really want to preserve principal. I'm a very conservative kind of guy. So when I hit a home run, I'll take a victory lap, but I'm looking more for base hits and doubles. On the flip side of that, the headwinds that we're currently facing obviously is around liquidity, lending, operations, new supply coming on the market. Because, in 2020, 2021, when, rental rates were going through the roof, 20% year over year. I mean, that gets a lot of the developers excited, right? Oh my God, I'm going to go to that market, whatever market it might be. And there's a supply shortage. So I'm going to go start building 200, 300, 400 unit complexes. Well, those are starting to come to market now. people can't afford to buy homes, right now with 7 and 8% mortgage rates. So there's new supply, there's financing issues, but the way to really kind of mitigate risk is to align yourself with experienced folks who have kind of been through this before. It's not their first rodeo per se. They have relationships with bankers, relationships with lenders. We love to work with vertically integrated sponsors, so that means that they own their own property management firm. So the values are aligned between the acquisition and the property management and asset management. So I would just say, look, I mean, real estate can be incredibly profitable, or you could lose your shirt, right? And that's what I think what turns people off about it. But as long as you're building your team, you're constantly educating yourself, you're listening to good radio shows just like this one. I'm confident that you can be successful in this space.
Excellent. Yeah, it seems like it's always the big challenge is the debt part of it, because that can potentially sink. And I mean, I'm talking from a guy who does debt. Because it's like, listen, I'll be willing to give up the profits. I just want to preserve my principal. I want to get a decent rate of return. But if you don't pay me, I am going to foreclose, and that's a typical banker. So
yeah, I talk to people all the time, right? I mean, it's not the property that fails. When you hear about a property failing, it's not the sticks and the bricks that fail, right? That is, performing. It's the structure of the deal. It's the debt terms. It's the asset management, the property management. It's the way that the documents are written. Like, it's usually some sort of structural issue within the framework of the deal.
But then also you had some weird things like COVID and people not paying their rent. And having to work, not everybody was like that, but some people were, and that can be really challenging because that's something none of us had ever faced. I mean, I've been in this business for 40 years, and we never had COVID. We never had a situation like that, and so who knows what the future is going to hold on that. So you're right. I mean, as long as you got a good, decent team, you can kind of weather a lot of these storms. So Tim Lyons, it's an absolute pleasure to have you. How do people get a hold of you if they have questions?
Yeah, you can call me on my phone number is 516-521-7762, or you can email me, tim@citysidecap.com, and our website, is citysidecap.com.
All right, here's our thoughts for the day. So diet, day number 1, I removed all of the fattening food from my house. It was delicious. And when I was little, I asked my mom how I was born. She told me that a stork brought me to her. When I asked the same question about how she and daddy were born, same answer, the stork came. When I asked about grandma and grandpa, the same answer. So several days later, I handed in a report telling my teacher how difficult it was to write because there hadn't been a natural childbirth in my family for 3 generations. All right, audience, tune in next week. Of course, we always have these dad jokes and dad thoughts.
I love
Tune in
those.
next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.